More than 11 million Americans have picked health plans made available through the Affordable Care Act, exceeding White House estimates. The exchanges were a big part of the U.S. health insurance story last year, but not the only one.
The CBO was expecting about 13 million enrollees on the health insurance exchanges. There were actually about 8 million to start off the year. By year end, there were only 6.5 million. So enrollment was much lower than expected. Most insurers had to do their pricing prior to the rollout of the exchanges, and assumptions were built in with regards to how much of the population would include healthier individuals. Some of those assumptions were thrown off by President Obama's "if you like your plan, keep it," which impacted the population entering the exchanges and resulted somewhat in increased utilization. The ACA, the insurer fee, which went into effect, it was $8 billion across the industry, and insurers had to pay that in the first quarter of 2014. We saw a pronounced impact on insurers' financial statements in the first quarter, but throughout the year, results kind of normalized. There have been assumptions that had to be made with regards to the risk adjusters and the risk corridors, which resulted in either payables or receivables being booked on insurers' financial statements, and that impact is still unknown as far as how those will actually play out. The whole industry had assumed that there would be a major drop in small group coverage primarily. With some of the technological glitches that occurred, as well as some of the general uncertainties regarding the exchanges and the impact of the "if you'd like to keep your plan, you could," all of those combined resulted in a lot lower drop than most studies in the industry had predicted would occur. There's been a decline for several years now in the small group market. There has been a general decline, more so because of the switch from HMO to PPO, from fully insured to ASO type arrangements. And so that block of business has been declining. The individual piece of that segment has obviously increased very noticeably.
On the insurer side, the individual enrollment was cumbersome for them. They had to work on business flows, system upgrades, and then also with the technical issues, they had to increase administrative expenses to bring on the individuals because they're labor intensive as far as the enrollment process is concerned. The carriers are generally staying very interested in Medicare Advantage, but they're being a little bit more selective as to the regions that they are offering their products in. They're looking for places where they have the most volume and also the most advantage with their provider relations. Originally, they were proposing that all states expand the income eligibility of the Medicaid programs, but that provision had been struck down and it became optional for the states to do so. But that being said, I think at this point about 28 jurisdictions, including the District of Columbia, have elected to expand their Medicaid programs. Those states which predominantly utilize managed Medicaid are utilizing insurers to provide these services to the enrollment.
With the shift in the onus from the employer to the employee in providing for their own health and wellness products, carriers are picking up on this and seeing that there's a lot of opportunity for them to offer products to this customer base. And there's been discussions about how long-term care insurers are having to put up additional reserves, both active and claim reserves, based on older blocks of business and the assumptions that were made long ago as far as interest rates, lapse, and so forth.
One of the other ancillary products that's been shown some interest by the insurers is Medicare supplemental. Due to the growing over a 65 population in the United States, that is definitely an area for growth for insurers going forward. The health industry's financials have been very, very solid through the third quarter of 2014. They're seeing top-line premium growth. The medical trend has continued to stay moderate. Investment income has remained suppressed due to the low interest rate environments, but health insurers are not heavily reliant on investment income for their bottom line. They do usually produce favorable underwriting results, and they have done so. So earnings remain favorable for the industry, but margins have compressed.
There is a lot of diversification occurring in the marketplace, both in the regulated insurance products and non-regulated products. Technology advancements are occurring, and there is a lot of provider collaboration, government collaboration, and alignment which is occurring. And with that, we believe that carriers who are implementing these strategies could see positive rating movement going forward.
We'd like to thank AM Best for their contribution to our program. If you'd like to see more of the First Monday series, visit the AM Best website.